Hey there, investaholics and friends. Welcome to another ETF Spotlight review. Today we'll be taking a look at IZZ, which is the iShares China Large-Cap ETF, brought to you by those fine people at iShares. Hey there, investaholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at KrackTheSky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up and also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. Okay, let's crack on into the information. So the fund aims to provide investors with the performance of the FTSE China 50 index. The index is designed to measure the performance of the 50 of the largest and most liquid Chinese companies which trade on the Hong Kong Stock Exchange. So this isn't mainland focus, this is Hong Kong focus. The index is designed to track the performance of the largest companies in the Chinese equities market that are available to international investors. Consists of the largest 50 and most liquid companies, as we just said. Constituents of the index are float weighted based on their total market value. So securities with a higher total market value generally have a higher representation in the index. Individual constituent weights are capped at 9% to avoid over concentration in any one security. So as always, we don't want to be over concentrating if we can avoid it. But I suppose it depends on who you talk to, I suppose. Anyway, the Y factor, exposure to large companies listed on the Hong Kong Stock Exchange. Number 2 here, access to 50 of the largest Chinese stocks in a single trade. You can use this if you have a particular view on China. So if you like China, this might be the way to go. Okay, let's have a look at the numbers here. Net asset value of $54.22, trading just above that at $54.56. Market capitalization of the fund's about 200 million. Management costs is probably a little bit on the high side at 0.74%. Semi-annually, you'll get yourself a distribution, and January and July. Dividend yield is about 1.7%. So the constituents of the index are primarily financials, energy, and information tech. If you're looking for exposure to Asia and more specific large Chinese companies in this ETF, might be worth a closer look. Considering that there's a lot of sort of negative news coming out of China now, so as people get out, it might be the time to get in if you're a long-term investor, that is. In the near to long-term, China could be a fertile hunting ground for shrewd investors. It's one of the fastest growing emerging markets in the world, and its unique commercial landscape affords many interesting opportunities. But with those opportunities comes risk. As most people know, China lacks a bit of transparency, especially when you don't understand the Chinese system. Us foreign investors, but it's one to have a look at. Whether you invest in IZZ or you take a look at CETFE or CNU, which is the other alternatives that are probably worth having a look at. I think China, if you've got a 5, 10, 20 year investment horizon, I think it's probably going to do good for you over the time, as long as you stay in and you don't sell out when it dips out. You top up and just sort of keep doing it that way. Might be a good little opportunity to earn a few dollars. Top 10 holdings here. Some of them I know, some of them I don't. Obviously, we all know Tencent, Alibaba, JD, Baidu. They're really the only ones I know. But yeah, that's a nice mix. So you know, you're definitely getting exposure to a good mix of companies there. So date of inception here is 5th of October 2004. So if you invested your 10,000, then you've got 216% return roughly. The date that I did the screen capture anyway. So that's 6%, 6.7%. Since inception. You're looking at a bit of a lag over the last 12 months. Be expected with all the turmoil and stuff going on in China at the moment. You're looking at a PE of about 14 and a price to book at 1.81 or thereabouts. So I mean, it's not overly expensive, but it's not really cheap either. Wanted to have a look at, as I say, I think as a broader theme, I think it's not a bad investment idea, whether you use this product or you use one of the others. I think it's something that definitely deserves a bit further investigation. I think, you know, not having an investment in China might be a mistake in the long term. You know, it's hardly likely that they're going to shut down the whole economy and go back to being 100% sort of that really strict sort of communist type arrangement. I think they've kind of passed that, but just looking to be a little bit more socially conscious to sort of make sure that people aren't left behind too much, and that will need a little bit of rejigging in what they do. But I think in the long term, China will still be a good place to invest your money. Hope that was a bit of value for you guys, and catch you at the next one. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.